There are big changes happening in real estate today. We can see it happening all over the world, for better or worse. People are under the assumption that the way it's been going for the past few years is the way it will go for the next few years. And they may be in for a rude awakening. You came here for the truth, so let me unveil that for you. Today we're going to look at real estate. This will be a little bit of a lighter video today. I'm just going to show you first this article out of CNBC, the $1 billion price cut. Luxury real estate gets slashed. So you may have seen all of these beautiful properties in the US being built up, very modern homes, particularly in Bel Air and other areas where they're super expensive. Well, the high-end real estate market has seen steep price cuts in recent months as foreign buyers dry up and new tax laws kick in. They're talking about this particular home had to cut its price by $27 million. I mean, it's still at $138 million, but that's a significant drop. And Warren Buffett had to lower the asking price on his beach home in Laguna Beach. Okay, so he had purchased the home at $150K many years ago. So he has seen quite a bit of appreciation, but he did have to knock down the price significantly. They get into the details in the article here. I'm just going to forward down and cover some of the issues that they talk about in this article. The most expensive real estate in America just became a little less expensive, with $1 billion in price cuts among America's top listings over the past few months. The high-end real estate market has seen steep price cuts in recent months, foreign buyers drying up, new tax laws bite the wealthiest states, and sellers realize the market peak of 2014-2015 isn't coming back anytime soon. And that's the luxury market. You have to understand, this is not just a generic worker 9 to 5 and so on. We're talking about homes that are tens of millions of dollars. Very important to understand the distinction between the two. The real estate brokerage and research firm Redfin saying 12% of homes listed for $10 million or more saw a drop in their price in 2018, double the levels of 2016 and 15. Just over 500 listings in the US had a combined price cut of $1 billion in the second quarter. Prices were growing too fast for what buyers were willing to pay, and that is an absolute matter of fact. If you go in here, by the way, and if you haven't seen these homes before, they're absolutely incredible to look at. The prices are just astronomical. It's ridiculous, but it's interesting to see anyway, just for those who want to check it out. If you just go to a search engine and type in $500 million home, you will get it for yourself. It's literally on the top of a mountain. I think they leveled the top of a mountain. They cut it off, basically, and they dropped this massive building on the very top of a mountain. And it upset all the neighbors below because it's so big. Even though there are mansions all around, it makes them look like tiny little homes. It's pretty funny. So you could check that out if you're interested. And by the way, that home had to bring down its price. So it's just something you'll have to see for yourself. Misery from the Toronto and Vancouver housing markets is prompting many residents to consider leaving town. So this article here is talking about the factors that are really making up why people are living in a particular area, what they feel about that area, and so on. You can see that here 27% of respondents in Toronto classified their housing pain level as miserable, up from 17% in 2015. An additional 27% stated that they were uncomfortable, accounting for more than half of the respondents between the two categories. Vancouver, almost as bad, all right? So you have to think about what's going on, what's causing this. It is number one, they do say here, talking about the public transit and things, but the number one factor is money. It's money. That's really what it comes down to. If people are overburdened by the amount of costs that they have to run into on a regular basis, their monthly paychecks, their monthly expenses. This will hurt them at the end of the month. It's pretty obvious. So when you have more affordable areas, or the amount that, let's say the average salary is going to be able to help that person pay down the home. But when you have a disparity, not very high earnings with very high real estate, you start to run into a problem. And that is definitely present right now in Toronto. But I know wherever you live in the world, I'm sure you're going to say, I either live in a place like that or I know of a place like that. This was interesting about commercial property. We don't hear a lot about it now. Personally, as far as I'm concerned, I wouldn't touch retail property, wouldn't touch commercial property. I think the ultimate is really the multifamily units. Basically, anything more than 4 units is ultimate. I mean, the more units, the better, actually. But in general, you want multiple renters in one particular place. And that all depends on, your affordability. It all depends on the place you're in, because sometimes you can't even get that, first of all. Other places, it would be completely astronomical in price to be able to afford something that allows, 32, 64 or 100 or plus units. It just would be impossible for anything but a major corporation to purchase. It just depends on where you live, okay? But I think that that's the case. Investors are stomaching the lowest premium in more than a decade for taking on more risk in the U.S. commercial property market, as a humming American economy, not true, encourages money managers to reach for higher returns. And whenever they take these bigger risks, we generally have big problems that follow. The difference between the return on the safest slices of commercial mortgage-backed securities, not commercial property, but mortgage-backed securities, a pool of mortgages bundled into a bond, bunch of garbage, and the riskier slices has dropped to its lowest level since the build-up to the financial crisis. That's what we need to understand, heading back into the financial crisis territory. And that is never a good thing in any way, because we saw the excesses, we saw all of the problems that built up into it, and then we head back into that. It's not good. So right here is talking about the hunt for yield and so on. It gets into some more details. I'm not going to, bore you with the details for those who don't want to know. Check out the link in the sources. This right here I thought was interesting, and I finished off with the U.S. Census Bureau recently released population estimates for the 50 states and D.C. The release included data on how many people moved into and out of each state. The Northeast and the Midwest tended to have the more people move out than move in, while the South and the West tended to have the opposite. So I'll show you a map view of that. You might want to pause the video, or you might want to just check the link in the description. It's out of Business Insider. Net domestic migration, you can see this. How it all works is from 2016 to 2017. I believe that is the newest numbers out of the Census Bureau. But you can look around and see where the negatives and positives are. I'm looking at Illinois. It's got a big negative number written all over it, minus 8.9. And look at a place like Nevada, positive 13, Arizona, positive 9.1, and so on. So I just thought that would be interesting to show you there. Depending on where you live in the United States, you may be able to verify this data if what you think. I know a lot of people say that there's a lot more people moving into California than moving out, but statistically I've seen it to be both in and out. It doesn't mean that only people are moving out. That's not how it works. People are moving in and out, but they're tending to go to other places that are more affordable. From California, maybe they're going to Nevada, maybe they're going to Arizona, maybe they're going to even Texas, I'm noticing, and also even Florida. Okay, they're in search of more affordability, maybe better jobs, so on. There are a lot of factors here. So if you found the video informative, please give me a thumbs up. Just a little bit of a more lighthearted video today. Just wanted to bring that info to you. If you found it helpful at all, hit that thumbs up. If you want the financial education you were not taught in schools, these 2 books have it all. You can check them out in the link in the description. If you're more interested in the audiobook version, you can get that at themoneygps.com.